This week, the market split in two. The Dow Jones, home to the old guard, dipped slightly, steady, but not exciting. Meanwhile, the Nasdaq soared to a new all-time high, powered by tech and innovation. The message: the future is technology, and the action is in the Nasdaq. Artificial intelligence is fueling this surge, lifting companies at the heart of the revolution. The Dow whispers caution, but the Nasdaq roars optimism. This is a battle between tradition and transformation, and right now, tech is winning big. Don't just buy the market, know what's driving the winners. The split is a neon sign. Follow the innovation. Don't fight the tape, and don't fight the future. This week, all eyes were on the Federal Reserve, the powerful institution at the heart of America's financial system. Whenever the Fed makes a move, the ripple effects are felt not just on Wall Street, but in homes, businesses, and communities across the country. The big headline? The Fed decided to cut interest rates by 1/4 point, a move that might sound small, but can have a huge impact on the economy. When interest rates go down, borrowing money becomes less expensive. That means businesses can take out loans to expand, hire more workers, or invest in new technology. Homeowners might see lower mortgage payments, and investors often find it easier to access credit for new opportunities. Even families looking to buy a car or pay for college can benefit from lower rates. The goal? To keep the economy running smoothly, encouraging spending, investment, and job creation. When money is cheaper to borrow, people and companies are more likely to spend, which helps keep businesses busy and workers employed. But setting interest rates is a delicate balancing act. The Fed has to weigh the risks of moving too fast or too slow. If rates are cut too much, it can lead to inflation, where prices for everyday goods and services rise faster than wages, making life more expensive for everyone. But if the Fed doesn't cut enough, the economy could slow down, businesses might struggle, and jobs could be lost. It's a tough call, and the stakes are high. This latest rate cut is a clear signal. The Fed is more concerned right now about the risk of an economic slowdown than about runaway inflation. They're trying to give the economy a boost before things get worse. At first, the markets reacted with excitement. High-growth tech stocks, in particular, love cheap money. It helps them invest, innovate, and grow even faster. Investors cheered, and stock prices jumped, but the real drama unfolded after the announcement. Investors and analysts hung on every word, trying to read between the lines for clues about what the Fed might do next. When Fed Chair Jerome Powell stepped up to the podium to explain the decision, the mood shifted. His comments were carefully chosen, but even a hint of uncertainty or caution can send shockwaves through the markets, and that's exactly what happened. His words sparked a new round of volatility, as traders tried to figure out what the future holds. The truth is, the Fed's decisions don't just affect banks or big investors. They shape the financial future for everyone: families, workers, business owners, and retirees alike. That's why every move, every word, and every signal from the Fed is watched so closely, because it can change the course of the economy and the lives of millions of people. After the rate cut, the atmosphere on Wall Street was electric. Traders were on edge, reacting swiftly to the news. The Federal Reserve's decision to cut interest rates was anticipated, but the real story unfolded during Jerome Powell's press conference. Powell's press conference changed the mood. His words carried weight, and the market hung on every sentence. He addressed the media with a calm, yet firm demeanor, setting the tone for what was to come. He made it clear: another cut in December isn't guaranteed. This statement introduced a layer of uncertainty, making investors rethink their strategies. Powell emphasized the importance of data-driven decisions, highlighting the Fed's cautious approach. The Fed is cautious, flying blind after a government shutdown muddied the data. The lack of clear economic indicators has made it challenging for the Fed to chart a definitive course. This uncertainty has ripple effects across the financial markets. The vote to cut rates was split, showing real debate inside the Fed. This division underscores the complexity of the current economic landscape. Different perspectives within the Fed reflect the broader uncertainty in the market. Powell said inflation is near target, but tariffs are keeping some prices high. The ongoing trade tensions have added another layer of complexity to the Fed's decision-making process. Balancing inflation targets with external economic pressures is no easy task. He's watching layoffs and the impact of AI on jobs closely. The rise of artificial intelligence and automation is reshaping the job market, and Powell is keenly aware of these changes. The Fed is monitoring these trends to understand their long-term implications. When asked about the tech rally, Powell drew a line. Today's tech giants have real profits, unlike the dot-com era. This distinction is crucial, as it suggests a more stable foundation for the current market surge. Powell's confidence in the tech sector provides reassurance to investors. That's a big vote of confidence in the AI boom. The enthusiasm around AI stocks is palpable, and Powell's comments have only fueled this optimism. Investors are betting on the transformative potential of AI technologies. The message: this rally is built on earnings, not just hype. Solid financial performance is driving the market, providing a more sustainable basis for growth. Analysts are closely examining earnings reports to gauge the health of the market. Powell's words matter as much as the Fed's actions. His statements can sway market sentiment, influencing investor behavior. The press conference highlighted the power of communication in shaping economic expectations. Uncertainty is back in play. Investors, stay nimble. The market's reaction to Powell's press conference underscores the importance of adaptability. In these volatile times, staying informed and flexible is key to navigating the financial landscape. Nvidia just made history, becoming the first company to hit a $5 trillion market cap. This isn't just a milestone, it's a coronation. Nvidia's chips are the backbone of the AI revolution, powering everything from ChatGPT to self-driving cars. Demand is off the charts, and every major player wants their hardware. Hopes of easing US-China chip restrictions sent the stock even higher. A $5 trillion valuation means investors see Nvidia printing profits for years. The AI revolution is just beginning, and Nvidia is at the center. As Powell said, these companies have the earnings to back up the hype. Nvidia's run is a sign. The future belongs to the innovators. BOOYAH! The tech rally is led by the Magnificent Seven: Nvidia, Apple, Amazon, Alphabet, Meta, Microsoft, and Tesla. These giants drive the market. When they move, the whole market moves. This week, earnings season put them under the microscope. Investors want proof that AI investments are paying off in real revenue and growth. Their performance is a health check for tech and the entire economy. If they soar, the market soars. If they stumble, everything shakes. The concentration of power is unprecedented. So, watch these names closely. Their success is why the Nasdaq is at record highs. Beyond tech, other companies made big moves. Caterpillar surged 12% after crushing earnings. Good news for the global economy. Fiserv cratered 47% after slashing its outlook and shaking up leadership. A brutal reminder of Wall Street's ruthlessness. Boeing had mixed results. Better revenue, but a bigger loss from a one-time charge. The stock traded sideways, showing the challenges even giants face. Etsy dropped 9% after its CEO stepped down. Leadership changes spook investors. These stories prove it's not just about tech. Earnings, leadership, and outlooks drive stocks everywhere. To understand the market, look beyond the headlines. Winners and losers are everywhere. Stay curious. US-China relations are always in the market spotlight. This week, a possible thaw in trade tensions sent optimism through Wall Street. China is both a supplier and a customer for American giants like Apple and Nvidia. Any hint of a deal, like easing tariffs or opening markets, can send stocks soaring. The Nvidia rally got a boost from hopes of relaxed chip sales to China, but trade is a double-edged sword. New tariffs or harsh words can tank stocks fast. Investors watch every diplomatic move because it hits the bottom line. The tone between leaders matters as much as any earnings report. Global drama drives your portfolio. Stay tuned. This story never ends. AI isn't just hardware. Behind every powerful machine, there's a world of code, algorithms, and human ingenuity driving it forward. The blinking lights and humming servers are only the surface of a much deeper revolution. Software is the other half of the revolution. It's the invisible force that brings hardware to life, transforming raw computing power into intelligence that can learn, reason, and create. Every breakthrough in AI is powered by lines of code written by teams of brilliant engineers working tirelessly to push the boundaries of what's possible. OpenAI, the visionary creator of ChatGPT, is making waves with a groundbreaking new deal that gives it more independence from Microsoft. This move could reshape the balance of power in the tech world, allowing OpenAI to innovate even faster and pursue its own bold ambitions. An OpenAI IPO could be the biggest Wall Street has seen in years, with a private valuation soaring near $500 billion. Investors and analysts are watching closely, eager to see how this AI powerhouse will shape the future of technology and finance. The AI arms race is heating up. Tech giants and startups alike are scrambling to secure their place in this new era. Every major player is investing billions, hoping to gain an edge in the race for smarter, faster, and more capable AI. Amazon's partner Anthropic is deploying 1 million custom chips, building the infrastructure needed to train ever larger AI models. These chips are the engines powering the next generation of artificial intelligence, enabling breakthroughs that were unimaginable just a few years ago. Meanwhile, Google is designing and manufacturing its own advanced chips, determined to stay at the forefront of AI research and development. Their custom hardware is tailored for the unique demands of machine learning, giving them a critical advantage in this high-stakes competition. It's a scramble for computing power and software dominance, with companies racing to out-innovate each other. The competition is fierce, and the stakes couldn't be higher. Whoever controls the best AI will shape the future of industries, economies, and even society itself. Hardware and software feed off each other, accelerating innovation at a pace never seen before. As chips become more powerful, software becomes more sophisticated, creating a feedback loop that drives exponential progress. Investors need to understand both sides of this equation to spot the next leaders. It's not enough to bet on hardware or software alone. The real winners will be those who master both and can see how they work together to create value. The AI gold rush is just starting. Like the great booms of the past, fortunes will be made and lost as visionaries and risk-takers race to stake their claim in this new frontier. Fortunes will be made by those who see the future clearly, who can anticipate where technology is headed and act boldly. The race is on, and the outcome will define the next era of human progress. Why do stocks soar or crash? It's all about expectations. Stocks rise when investors believe future profits will be bigger. They fall when that outlook dims. Every headline, earnings, Fed moves, trade talks shapes those expectations. Nvidia soared on AI optimism. Pfizer crashed on bad guidance. The Fed's words and actions set the tone for everyone. The market craves certainty and hates doubt. Watch the Magnificent Seven's earnings, US-China talks, and economic data. The market is driven by fear, greed, and the search for the next big thing. Do your homework, follow the trends, and never stop learning. There's always a bull market somewhere. Stay sharp.